What is a stock? A stock, also known as equity, represents partial ownership of a company. When investors purchase stocks, they become shareholders, gaining rights to a proportion of the company's assets and profits based on the number of shares they own. Companies issue stocks primarily to raise capital for expansion, R&D, or debt repayment. Stocks are broadly categorized into common stocks and preferred stocks. Common stockholders typically have voting rights in shareholder meetings, with the number of votes proportional to the shares owned. They may also receive dividends, depending on the company's profit distribution policies. However, in the event of bankruptcy, common stockholders are last in line to claim the company's remaining assets. Preferred stockholders have priority over common stockholders when it comes to receiving dividends and claiming remaining assets in bankruptcy. However, they usually do not have voting rights. Investors seeking stable dividend income would like to hold preferred stocks. How the stock market works. The stock market is a vast and intricate network where company shares are bought and sold. Stock exchanges serve as platforms for these transactions. The Amsterdam Stock Exchange is widely regarded as the world's oldest modern securities market. It was established shortly after the Dutch East India Company was founded in 1602, marking the beginning of regular equity trading as a secondary market for its shares. Modern financial market stock exchanges, such as the New York Stock Exchange, NASDAQ, and Australian Securities Exchange, are now highly technological and interconnected. They are dominated by electronic trading platforms, high-speed internet connections, and computer algorithms. When a company wants to go public, it conducts an initial public offering, IPO, transitioning from private to public ownership. Through this process, the company sells shares to the public for the first time. Once listed, these shares are traded in the secondary market. The market operates under strict regulations to prevent fraud and maintain fairness in trading activities. Functions of the stock market. The stock market plays a vital role in the global financial system, offering numerous functions that benefit both companies and investors. Capital formation. The stock market helps companies raise funds for expansion, innovation, and value creation, contributing to economic growth. Liquidity. It provides investors with liquidity, enabling them to convert investments into cash or reinvest idle funds quickly. Price discovery. Stock prices are determined by supply and demand, reflecting investor expectations of a company's value and growth potential. Economic indicator. The stock market serves as a barometer of the economy's health. A rising market often signals economic growth and strong investor confidence, while a declining market may indicate economic challenges. Performance benchmark. Stock indices like the S&P 500, BSE Sensex, and ASX 200 act as benchmarks for overall market or sector performance. These indices help investors evaluate their portfolios and are also commonly used as benchmarks to evaluate the performance of fund managers and stockbrokers. In conclusion, the stock market is a cornerstone of modern economies, offering companies a platform to raise capital and providing investors with opportunities to grow their wealth. Its dynamic nature reflects economic trends and investor sentiments, making it an essential element of the global financial system. That's all about the stock market. Thank you.